make of Mr. Tepper's comments and ideas,
well,
Tim?
I think yesterday's Fed response was somewhat misunderstood, frankly. I think yesterday was about getting the bones, the plumbing, the infrastructure of the market liquidity moving. And I think there's been a major liquidity dynamic in terms of extending collateral, et cetera. And I think, that's good for part one. I do think that the question of QE4, or is it really QE5? Arguably, we had QE4 in October of last year through the end of the year, which pumped a lot of liquidity into markets, is something that the market wants to see. The irony is, of course, I think we've heard less from the Fed at a time than we might have in the past, or so it seems. A Fed that's tried to have been very transparent for the market. So I think Jerome Powell and co. are certainly hard at work, and I think the market should be expecting more, in addition to probably cutting down to zero at the next meeting.
It's funny that you say that was misunderstood, because, of course, we saw the news, we saw the initial market reaction, and we really sort of pared back some of those losses before then ultimately quickly losing them again. I'm wondering, though, if what the Fed is trying to do is really lay more of a foundation rather than sort of fix this current problem, which, by the way, is not of the Fed's doing.
Right. It's not of the Fed's doing. It's not. The Fed's not in a position to stop this problem. This is a healthcare issue. This is an issue of confidence. This is an issue that's then getting into dynamics that are liquidity based, and that's where the Fed needs to do its job. I mean, you had a market. First of all, to be clear, the Fed has encouraged building leverage, and certainly there's been a lot of liquidity in the market, and at some point it's essentially been taken back. And I think that's something that the Fed needs to focus on. But look, we need a fiscal response. We need a health care response. We need a coordinated action. The sense that policymakers are scrambling is starting to come through to the markets. Obviously, on just the lifestyle approach, people's lives are quickly changing, and I think actually as that begins to settle in, I think those are the kinds of things. I know that's disturbing, but that's the stuff that the market was moving on yesterday. I think the fact that there is this move towards bringing in policymakers and actually making a healthcare approach is part of what the market is needing to see.
So it is Friday, of course. We've had a very turbulent week, to say the least. Right now, futures are indicated higher. If you're waking up and you're an investor this morning, what are you to think? What are you advising us to do, Tim?
Well, we're at a point where the velocity of this move is so extraordinary, even as we can start to compare it to the financial crisis and September, October, and where we are elevated on volatility. I think one of the things that had to happen here was that a lot of traders, a lot of big institutional traders, a lot of folks that are putting balance sheet have tried to simplify. They've had to sell both sides of their balance sheet. You've seen that all asset classes have actually sold off. I mean, even things like gold. That's telling you where the leverage in the system was. I think you get to a place, and this is for all investors, where great companies have been put on sale. And at some point, you get to this place where you see a company like a Disney, or you see, look, I know Boeing, I heard you talking earlier in the show, they drew down a big credit line, their leverage has changed, but this is one of the great companies in the world, and to see it down 54% in 19 days, these are things I didn't think I would see. As an investor, those are moments that I think you really have to be making your list, and I think there are great stocks that are on sale.